Good day everyone, good day ma'am. I'm Elaiza Taculod from PSHM2B, and right now I'm going to report the chapter 6 entitled Organization for Finance. So we have here the learning objectives, so the student should be able to first define what is the financial function, the second identify the different functions of banks, and the third is describe and explain the importance of the budget and the credit information. Introduction. Organization for finance. Inasmuch as the primary purpose of a business enterprise is to make profits, the handling of the firm's finance is therefore extremely important. Money is needed to start the business, and it is needed when the business is expanding. Capable handling of finance provides money for these three purposes as it is needed. So what is the financial function? So the financial function is essentially concerned with the management of monetary affairs with the raising and expanding of money. It may not be as dramatic as function as manufacturing or sales, but it is equally important, and very often its direct handling is retained by top management. In the bigger corporations, there will be both a treasurer and a comptroller. In that case, the treasurer handles external finance, while the comptroller handles internal finance. Thus, the treasurer arranges the issuance of stocks and bonds, handles the acquisitions of short-term loans, furnishes the information required by banks, and advises on the various means whereby the company could raise funds or borrow money. The treasurer suggests the distribution of profits, the payment of dividends, flowing back of earnings into the business or investments in the stocks and bonds of other corporations, while the treasurer may ensure that company assets and authorize disbursements. On the other hand, the comptroller would handle the departments taking care of bookkeeping, accounting, cost accounting, credit and collections, and statistics. So we have here the capital pool, savings and investment. Where does the money come from? The financing of business enterprises. Savings are generated directly and indirectly by individuals, business enterprises, a variety of institutions, governments, and others. This saving flow into the capital pool of market through many channels. The market is a network of many institutions, channels, and processes distinguished by the sources of their funds, by the different areas they cover, by the different types of loans they make, and by the variety of borrowers they serve. So we have here the financing the non-corporate enterprise. So what is the financing non-corporate enterprise? So in the case of the single proprietorship and the partnership, the initial capital comes from the individuals directly interested and possibly through the loans on investments that friends are willing to make in a business. So in addition to cash, these individuals may contribute the actual land, buildings, machinery, and materials needed to make up the productive capital of the business. Launching a new enterprise through cash and property, the contributions of individuals personally interested in a venture is one of the oldest forms of business promotion, and it is continues to be an important method of financing today. So we have here also the initial corporate financing. So it is the corporate enterprise that is most concerned with the problem of capitalization. Commonly employed in corporate financing are the corporate securities such as stocks and bonds. Before the basic financial structure of the enterprise is complete, the total authorized capital stock must have to be classified. So stock classification determines the relation of stockholders to the enterprise. With this, the rights and limitations of those who have an ownership interest in the business are set. Stock also as corporate financial instrument are explained under if the discussions of classical of the capital stock. So if the capital for a major operation is expansion, is however to be borrowed, the usual way is by bond issue. So bond issue are company promises to repay the loan and backed by a mortgage on the part of all the company's property. So the mortgage takes the form of trust agreement, which contains all the rights and obligations between the company, so borrower and the lender, bondholders. So the instrument designates a trust who represents the bondholders, and it defines its power and obligation. The essential relation between the company and the holders is that of the debtor-creditor. So while a stockholder is an owner, a bondholder is a creditor. So bonds are differentiated from the other loans of a corporation in that they partake of the nature of mass borrowings, or whether a group of persons become creditors of the corporation. So in the event of default in payment of interest or principal, the designated trust in the agreement has the power to take various actions to protect the bondholder. So a company desiring to issue bonds must make a careful study of the many different kinds of bond issues, so which differ according to the purpose of the issue, the nature of the security, the terms of payments, and miscellaneous conditions affecting the interests of the various parties. So for instance, there are construction bans, improvement bans, equipment bans, reorganization bans, general bans, and other indicating the purpose for which they are issued. So we have the financing day-to-day operations. So once a business is started, the money requirements of the company are continuous for good wages and other expenditures of a going concern. So everything a business does result in money coming in or going out, and in property being bought or sold. The sales department tries to sell all the good items it can, and purchasing department tries to buy what is needed when it's needed. The treasurer must pay the bills incurred by the purchasing officer, who in turn must protect and purchase materials, and the credit manager must effect collection of payment of the goods that sales department has sold. So these numerous transactions require proper records and constant supervision, lest money be wasted and property dissipated. So keeping and checking of accounts are done by the accounting department, and the cashier handles the cash, acting for the treasurer, who has the responsibility of being constantly on the watch to see to it that the company's finances are conserved at all times. So cash position. So what is cash position? So there shall be enough money available to pay every obligation when it is due. So such money, except for initial capital and subsequent expansion, should come from cash sales and from collection of amount receivable. So the cash position of a company is the amount of money on hand or inside, so in relation to the total sum of accounts payable and notes payable coming due during the same period. So careful managers reckon it frequently, in many cases every day. The next is the financing seasonal businesses. So quite a number of businesses are seasonal in nature. A summer hotel, for instance, is a highly seasonal business, and unless it is located in a high area or in a tourist spot or beach resort territory, does its business during the rainy season. This is a business which has a lively demand during hot season, and little if any in the cold months. So these are many other industries that are seasonal, though not to the same extent. So the significance of seasonal business to the company treasurer is that during the dull season, the company may not be producing enough business to bring much money. So yet the trained employees have to be retained through the dull season, and materials have to be purchased. So we have here the different functions of banks. So banks have two functions. They act as middlemen between savers and investors, that is between the supply of and demand for capital, and they supply the principal means of payment in modern communities, bank credit. If the banking system is working properly, the middleman function should bring about continuous equilibrium between the volume of savings and the volume of investments. So financial institutions, banks, can really facilitate the saving investment process by performing one or more of the following general functions. So first is the gathering, disseminating, and using information. The second is purchasing, holding, and selling securities. The third is providing diversification and insurance against risk for savers and depositors. The fourth is increasingly liquidity to those who part with money and hold other claims. And lastly, the fifth is explain the different kinds of credit. So we have here the short-term financing. So traditionally is used for seasonal purposes, for example, to build an inventory. So in the short-term financing, we have here the trade credit. So trade credit is the normal credit forms extended to firms by their suppliers. The second is a secured borrowing, so likely to provide more money to most companies than trade creditors. A secured loan involve borrowings against accounts, receivables, inventory, machinery, equipment, vehicles, constructions, buildings, or any contact of some type. So such loans are available from banks, commercial finance companies, and a few other financial intermediaries. So we have here the unsecured borrowing. Unsecured short-term loans, lines of credits, and revolving loans. These are called unsecured loans only in the sense that they are not tied to a specific asset of group or assets. In fact, unsecured credit is secured by the general financial and operating strength of the borrower as evaluated by the lender. So since this general strength consists in large measure of specific assets such as receivables, inventory, and equipment, no company should be able to borrow twice against the same security. That is, a company may be able to get unsecured credits from its bank, or it may be able to borrow against its asset, but it should not be able to do both. So lastly is the paper and note. So short-term money is available through two-name or three-name paper of the various types. We have here the various types of the paper and note. So first is the acceptance financing. So most common of such paper which can be used as an example is the banker's acceptance. To borrow money through this mechanism, the borrower arranges a line of credit with banker and then issue a series of notes payable in 30 to 180 days. So the borrower delivers each note to the bank, and the bank endorses or accepts the note and may retain it in its own portfolio or sell it to the investing public. In the latter case, the purchaser on the note looks on the worthiness of the accepting bank rather than on that of the issuing company paying. The borrower in effect is paying the bank for the privilege of borrowing against the bank's credit. So the second is the commercial paper. So commercial paper usually issued by large, well-run companies. This consists of unsecured promissory notes, broadly similar to those which forms the basis of acceptance financing, except that they are not countersigned or accepted by anyone. Commercial papers are sold by a corporation, by or though commercial dealer, or directly to institutional investors at a discount for a maximum term of 9 months. So we have here lastly is the captive financing. So large companies which sell products against installments, less or rental payments may wish to consider establishing their own finance companies. While such a company will be lending rather than borrowing, a captive finance company with a good record will be able to obtain highly leveraged borrowing against its own name rather than that of the parent company. So the second various types is the intermediate term financing. So depend on large measure upon predictions of the business climate company, operations and cash flow. The extent to which lenders have confidence in the managerial control and forecasting abilities of the borrower is therefore crucial. So we have here the leasing. So leasing is one of the more popular methods of obtaining intermediate financing, or long-term financing involves the use of leases. So a lease is an instrument which permits return for payment. A lease is an instrument which permits a lease to use something, equipment, and or building in return for payments which are made regularly over time to the owner. A lease can be either a finance lease, net lease, operating lease, true lease, or leverage lease. So we have here the third is the long-term financing. The longest term financing is with equity, which occurs when investors turn over cash in return for the part ownership in the company. Evidence of the latter takes the form of a certificate of stock. So types also of the long-term financing is we have the debentures. So debentures, by far the largest volume of long-term funds, is made available to the companies in the form of term loans, either secured or unsecured. And B is the bonds. The fourth is government financing. Can take the form of direct governmental involvement, or there can be government programs to facilitate borrowings in other ways, such as by providing government subsidized or supervised insurance programs. The fifth is the off-bank financing. Refers to financing which does not appear on the balance sheet For example, a relatively strong corporation may guarantee the indebtedness of the subsidiary or a weaker company with whom it has a business relationship. So, the debt appears on the balance sheet of the company for which the guarantee is issued, but the guarantee is not recorded in the balance sheet of the issuing corporation. So, we have here also the petty cash. So, petty cash, although the company usually uses check-ins, paying bills, and most other items, it is necessary occasionally to make small payments by cash. So for this purpose, a certain sum of money is entrusted to the cashier sufficient to take care of ordinary cash requirements. So this money is called the petty cash fund. The cashier or some other company officials may be authorized to make payments from the fund, and all payments must be supported by petty cash voucher. The cashier or the authorized officer is responsible to the treasurer for the safety and correct use of the petty cash fund with supporting vouchers. The amount of cash is replenishable to effect continuous necessary payments. So we have here also the paying for good purchase. So when the company buys good from others, it receives a bill or invoice for the goods purchased. So checking is done in order to be sure that the goods have been received and are what were ordered. So if everything is in order, the bill is approved for payment and appropriate entries are made in the books. So we have here also the maintaining bank balances. Care must be taken to guarantee only that the bank account is not overdrawn, but that other requirements are also met. The handling of checking accounts by banks involves considerable expense on the part of the bank. To offset parts of these expenses, the two methods commonly used are the minimum balance requirement and the measured charge. So estimating cash requirement. How could the treasurer know how much money is required at any stated time in order to have the needed funds available? How could the treasurer determine the amount needed for the routine expenditures as account payable, utility charges for light, power, gas, telephone, and telegrams, the current purchases, and for non-routine expenses? And for non-routine expenditures, there are already known factors of expense which help determine cash requirements, and these requirements may be: first is for employee payroll. One of the first routine expenditures of the company. Payrolls have to be met every week of every 15th or end of the month. Payday comes regularly, and payrolls must be in three forms, namely the regular salary less the hour wage and the piece rate. The second is the for utility service. The usual utility service, telephone, telegraph, light, power, and bill are paid monthly. These cash requirements can more or less be routinely predetermined. And the third is for current purchases. So next are the invoice purchases. If the treasurer is consulted before proposed purchases are consummated, he will know in advance when the invoice will be due and can plan accordingly. The fourth is for non-routine expenditures. Unusual expenditures such as the purchase of special equipment or items that may amount to more than a stated sum must be planned for in a certain company, or a treasurer or any other top-ranking officer may be designated to approve certain amounts according to the company's custom for non-routine expenditures. So the next is the budget. Well-managed businesses are operated under a budget plan by which an estimate of expected income and expenditures of the company is drawn up in detail, showing where the money is coming from and where it will go. Some concerns prepare the budget in detail so that each department head and branch manager knows exactly for which part of the income and expenditures of the company he will be responsible during the coming year. Actual results are checked with the budget, which thus serves as a guide to the profitable operations of the business. A detailed budget also does not only include objectives, but it should be backed up by a carefully developed program for the attainment of the objectives. It is a daily chart by which the executive directs the effort of his staff. The budget is a statement of objectives in terms of specifications It sets goals to be attained in sales, expense, production, manufacturing, profits, and so on. These goals, however, do not serve their maximum purpose unless they are supported by carefully detailed plans and programs which indicate sources of action that will make it possible to attain the figures presented in the budget. The budget, to be a greatest value, requires the constant reference be made not merely for the purpose of seeing to it that operations are kept within the budget figures, but also to follow progress and see that the plans covered in the budget are carried out. The budget is not rigid, not hard and fast rule. Rather, it is a plan and a guide for carrying out a plan. So we have here also the purposes of budgets. So stated briefly, the purposes of budgets are: first, planning, a systematic and unified plan of activities for designated periods of operation. The second is control, a standard of measurement of result against which variations from previous plans become evident. And lastly, the third, coordination. Activities become a part of a plan for the enterprise as a whole. Democratic processes basic to the construction and operation of a budget tend to bring understanding and unification of departments and personnel. So, protecting the securities of the company. Protection of the company's property is another function of the treasurer. The securities of the companies may be kept in the company's own vault, but probably the safest place to keep all the securities is in the safe vaults of a bank, which are equipped with time locks, making impossible the opening of the vaults before a fixed time earlier set. The treasurer or any authorized assistants may have access to the safe deposit vaults anytime during the business day. Armed guards are usually assigned, as strictly limited and controlled. Some banks even provide conference rooms adjacent to their safe deposit vaults. No one but the treasurer of his deputies have access to the box or knows what is in it. Uses of credit information in the Philippines. Our financial system now operates on the basis of huge amounts of information concerning large and medium-scale business units, government units, domestic and foreign, and many other institutions that are actual or potential participants in financial markets. The basic data come from many resources: published balance sheets and profits and loss statements, reports to Securities and Exchange Commissions and other regulatory government agencies, reports to stock exchanges, especially investigations and so on. So such data are collected and compared, analyzed, or disseminated over wide areas by newspapers, specialized financial publications, investment advisory services, brokers and dealers, and others. Similarly, investors are kept informed about interest rates and other financial conditions in the various regions in the country and abroad. The best management in the world would be helpless without reliable information about its business, not minutia but expressive data. The lender wants to see reports firsthand to be assured that they fit into the corporation's overall objectives and represents a simple, manageable picture. An accounting firm can provide valuable assistance in the process.